And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channel Television. I'm Ladi Williams. First off, let's take a look at what's happening in the markets now, starting with oil prices. Rose earlier today on signs of improving fuel demand, though gains were capped as the market awaited clues from the U.S. Federal Reserve chairman on the outlook for rate hikes in a speech later today. Brent crude futures climbed by 46 cents to $99.80 a barrel, just below that $100 mark. And West Texas Intermediate crude also rose by 48 cents to $93 a barrel. Both slumped about $2 yesterday. Despite uncertainty over the pace of rate hikes in the United States to tackle soaring inflation, worries about oil demand destruction eased this week, putting both benchmark oil contracts on track for gains of around 3% for the week. And Chicago corn futures climbed 1% today, with the market rising for a seventh session in 8 and poised for a weekly gain as hot weather conditions continue to impact the U.S. crop raising concerns over world supplies. Soybeans also rose while wheat ticked lower. The most active corn contract on the Chicago Board of Trade, the CV1, was up by 1% to $6.56 a bushel. The market has gained more than 5% this week and is trading close to a 2-month high, scaled earlier this week. Farmers and commodity traders are closely watching the pro-farmer Midwest crop tour at a time when bumper U.S. crops are needed to offset low global grain supplies. And copper prices rose for a second straight session on today, and we're headed for a weekly gain as hopes grew that the fresh stimulus measures by top metals consumer China would boost demand amid declining inventories. 3-month copper on the London Metal Exchange was up about 0.6% to $8,177 a ton. Has gained about 1.2% this week. The most traded September copper contract on the Shanghai Futures Exchange, that rose about 1.7% to 63,480 yuan a ton. Copper's rebounded by 17% since touching 20-month lows on July 15th, but is still down about 25% from a record peak hit in March. And after the break, we drill down on reports by the Nigerian Bank settlement system showing mobile money transactions actually rose. That's in a moment. Just stay with us. Welcome back. Now to our first conversation. The Nigerian Bank settlement system revealed that mobile transactions by bank customers in Nigeria peaked at 9.2 trillion naira between January and July 2022. This accounts for an uptick in the 2021 amount of about 8 trillion naira. Let's discuss this and other financial services matters now with Ifeoma Bidoye, corporate banker at FBN Quest, joining us via Zoom. Great to have you on the program.
Thank you. Thanks for having me, Ladi.
Right. So looking at this uptick, compared to last year, how are you seeing it?
So I think this just indicates that, consumers are looking for easier, more convenient ways of, transacting, and just looking for ways to do business as much as possible, conveniently as much as possible. And also, this trend has actually picked up from, the COVID-19 situation when we're trying to have as much contactless payments as possible. So this is just a trend that we would expect to continue for the nearest future as we're looking for more innovative ways to make payment and avoid contact.
Right, and we know the central bank has been pushing for more cashless payments. What do you think can accelerate that drive at this time?
Okay, so 2 things actually. First of all, the first thing is to look at ways to incentivize cashless payment and also look at ways to de-incentivize cash. And so far, that's what the central bank has done. So if you recall, when this cashless policy came into place, there were charges that were associated with having, depositing cash over a certain amount of volume of cash. for individuals and for corporate. For individuals, it was about 150,000 naira, and for corporates, there was also a limit as well. And so, what this will do is make people rethink if they really have to make cash payments. So, if you don't have to make any cash payments, you're not going to take your money to the bank in cash form. You're going to, look for ways to transfer it, except it's really important. So in that way, you discourage people from using cash. Also making cashless payment very easy in terms of, technology. At a tap of a button on your phones, you can make a transfer, or internet banking. You can just easily transfer money to people who need it without having to go to the bank and using checks. It just makes it a lot easier. So what the two ways to do this is make sure that cash is a bit difficult for people to use, and then also ensure that the other alternatives are very easy and people are going to keep using them. And that's what we've seen. And so far, the central bank's initiative has seemed to be working really well.
Right, and talking about other central bank initiatives now, looking at central bank digital currencies, we know the Inara has been on the forefront of the central bank pushing, trying to push that cashless society. How do you see adoption for Inara at this time? We got that report about transactions about 2 billion naira or so, and I'm thinking, are merchants really using the Inara as we expect?
Yes, I believe that adoption will continue to increase. As a new initiative, it will take a while for people to get used to it, but merchants with time will start to adopt it. It's similar to what we have in Kenya, the M-Pesa. As people realized that it was easy to do business without having to actually have a bank account, it would encourage the use of the Inara. Of course, because it's still in the early stages, we can't expect it to be a massive adoption at this point. But as time goes on, people will see that it's a way to do business, especially the rural unbanked. It will be so much easier because not everyone can go to a bank account, can go to a bank to open an account, and that will just be an easy way to make payments in the nearest future.
I know other countries also, trying to push out central bank digital currencies. They're also struggling, with adoption at this time. Do you think that the central bank digital currencies are actually bringing, advantages to the table for the users?
Definitely. So when central banks do, introduce currencies like that, there will have been a lot of research and, studies gone into it. No one is going to come out and spend a lot of money without investing a good number of, research and time, and effort. So yes, I believe I will, and especially as they're being rolled out in phases that are in plan to ensure that they are adopted by the financially excluded. So yes, I do believe that it will. It might take time. It's not one of those things that will be adopted easily everywhere, but I believe that with time it will hit us.
All right, I'll keep watching that to see when people will start asking me for my maybe Inara wallet at some point. Be watching out for that. Well, we saw NIP transactions, POS transactions, all of them, up, at this time. Are we scratching the surface yet, talking about financial inclusion?
Yes, definitely. So let's look at POS transactions, for instance. I'm sure that many people would have seen at one corner of the street or, somewhere in the neighborhood, there are a lot of POS stands there. A lot of people now are able to transact and, get car payments, their payment solutions without actually having to go to a bank. And so definitely this is a way to meet the financial inclusion goal of the central bank. In fact, recent studies have shown that financial inclusion has risen to about 45%, especially in this last year. So it shows that this mobile payment and electronic payment have helped in a long way to ensure that most people who do not have access to banks still have access to banking services, which is really what the banking industry is trying to achieve and the central bank is trying to achieve. Because when you have financial inclusion for all people, whether in rural or urban areas, you're also ensuring that payments are done through transparent means. You're reducing corruption. You're reducing any sort of hindrance to economic growth. And obviously, that will also help in the development of the economy as a whole.
Right, and right now we have over about 200 fintechs, and they keep springing up, every day. How are the established banks, functioning with all of these fintechs just coming up all over the place?
So fintechs are, I think the way we need to start looking at fintechs, we should be more as collaborators with banks and not really as competition. So I know a lot of times people see them as competition, but the truth is that they actually, have slightly different value propositions. So the fintech brings different services to the table, banks bring different services to the table. There's some times where the services overlap, but the truth is fintechs need banks to operate. So for the fintechs that have lending platforms, for instance, they'll actually need to have some banking facilities where this cash or payments are received or are made and flow through. So banks are still required. Fintechs need banks. And the same way, a lot of banks in Nigeria today use one, fintech product or the other. So banks as well need fintech. So the way we should look at it is that they're more of collaborators helping to shape the financial services industry as a whole, not that one affects the other. I think that they make each other better, and that's how we should begin to look at this conversation when we're talking about fintech and banks.
And do you think at some point, maybe in the future, maybe the fintechs won't need the banks as much?
So you see, the banks in Nigeria and globally as well are evolving, because consumers are beginning to demand, new services, new products, and as times change, consumers' needs change. So banks are moving with the times, and fintechs and banks will require each other. I think that.
All right. If I'm okay, I think the service is back now. I don't know if you can hear me, but another trending issue right now is the dollar scarcity. Forcing banks to actually ration PTA to about $4,000. What's the idea behind this?
So what I can say is that, we all know as a nation, uh, 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 has dramatically reduced, and so that would have that the level of effects that has been inflowed into the economy. And I think that each bank decides what is best for their operation. I think that that's really what's happening there.
Yeah, quite interesting. We'll keep tracking all of that. But amid the huge global and domestic challenges we're having now, how do you see bank resilience going forward? Talking about Nigerian banks.
So Nigerian banks are extremely resilient, especially now that that our capitalization base is really really formidable. Regardless of what sort of headwinds that come, the banks in Nigeria have been able to withstand it. Even when there was a global crisis, we've seen from history.
All right, Yeah, the network is not being so friendly right now. But Ifeoma, I want to thank you so much. Ifeoma Abido, a corporate banker, FBN Quest. It was great having your perspective on the show. All right, so after the break, we'll drill down on the expectations for Nigeria's Q2 GDP results. That's the moment. Do stay with us. This is Business Morning. Welcome back now to our next conversation. Later today, the National Bureau of Statistics will be publishing the Q2 2022 GDP report for the domestic economy. Head of the release, Segun Adams, research analyst at Afrinvest Research and Consulting, is joining us now for expectations and performance of the economy and implications of the current events. Great to have you, Segun.
Thank you for having me, Ladi. Trust you are having a great day.
Yeah, it's going just fine. So we're expecting those results, and considering the multiple domestic and external headwinds we've seen in Q2, what are your expectations for the GDP data?
Thank you very much. So before I delve into the GDP data for Q2 expectations, I would love to provide context given the Q1 number which we've seen. So by way of refresher, recall that we saw real GDP growth of 3.1% year on year in Q1 2022. This is against 0.5% in the year before, that's Q1 2021, and around 4% in Q4 2021. And then when you sort of dissect that growth, you see that the non-oil sector actually grew by 6%, which was impressive. I'll come to that in a bit. But in the oil sector, we saw a contraction of 26%, which was a record low. When you look at the performance of the non-oil sector, it was pretty dismal, considering this was a period where we had global rally in the commodities markets. Oil prices averaged around $99 per barrel compared to $71 per barrel in Q1 2021. But sadly, our oil production levels dropped significantly. We dropped to around 1.5 million barrels per day, which was not impressive considering we did 1.7 in Q1 2021. And when you come to the non-oil sector, then you see that we saw some impressive numbers. 6% looks a bit decent, but then you have to understand that it was against 0.7% in Q1 2021. So there's that sort of base there. But when you look at sectors such as agri did around 3%. You look at sectors such as finance and insurance with 3%. You look at sectors like you look at ICT did 12%. You look at trade 7%. So these sectors, which are labor elastic sectors, they sort of performed very well. And when you look at the economy in terms of structure, then we've talked about agri. Then you look at agri, which comprises around 22% of GDP. It did around 3%. Then you look at services, which account for more than half of the economy, equal around 7%. But one thing about the Q1 data that we should pay attention to was that industries actually contracted by 7%, which is not good. So for an economy like Nigeria, we have to grow our industries. That is how we can unlock productivity in the economy. While agriculture and services are okay, but we tend to see that activities around these sectors that are low productive activities. So for an economy like Nigeria to unlock strength, then we have to improve. So with that background, coming to Q2, we expect that GDP should come at around 2.6% year on year in Q2. And the reason for this is that we recognize that Q1, there was sort of some base effect that was favorable. But also, when you look at the factors that have shaped the Q2 2022, then you sort of understand where we're coming from. For instance, you see domestic inflation continue an uptrend, unrelenting, and it reached as high as 18.6 as that June. 17.7% prompted CBN to deliver a rare interest rate hike, you can recall. When you look at PMI data also, even though PMI went into expansionary region, that's above 50 points in June, but you see that in May was sort of in a contractionary zone. This period also coincided with significant FX pressure rising energy costs, which accounts for a significant part of companies' overhead costs. So when you look at, broadly speaking, in terms of economic agents, you see that the government was struggling there with revenue. Households were struggling to under the weight of inflation to finance consumption. And you see that firms they were also struggling with high operating costs. So when you put all of this together, we sort of we're expecting it's 2.6%, which is also not very bad. A 2% will imply 2.9% overall in H1, which, if you trace the data back, it's as impressive as you can get up to 2015,
Right.
where we had 3.1 in H1.
Okay, but looking at your expectation of 2.6%, what would the implications be for the economy if that's actually what comes out?
Yeah, and thank you very much. And I think it's a very important question because we have to put context numbers. Say, for instance, myself and you and I, if we're able to create a value of 500 billion, and then there's a second group that creates a value of, let's say, a trillion, and then you want to sort of evaluate performance, it will be good to understand the facts behind the number, per head, what was the value creation. So for an economy like Nigeria, you recall that as of 2019, based on official data, the NBS reported that 4 in 10 Nigerians live below the poverty line. This was before COVID, this was before the Ukraine war, before rising energy costs, before all of these headwinds that we're currently witnessing. One thing that we have to pay attention to is how well is this economy growing. I think if you look at the data, we have a population growth rate of 2.6%. At 2.9%, which is also our full year outlook, the growth looks a bit higher than population growth, but it's not very significant. And then when you zoom out, look at the 10-year trend in Nigeria economy, discover that we have grown by around 2.4%. Globally, based on World Bank data, the global economy has grown around 2.6%. Sub-Saharan Africa has grown around 2.7%, but Nigeria has done 2.4%. It's not very impressive. When you look at countries with large population like China that has done 6.6, India around 4 or 5%, you tend to see that our economy is not growing optimally. And this has negative implications for poverty. World Bank expects that in addition to 6 million people that earlier projected to enter poverty line, an additional 1 million people will fall below the poverty line. So the implication of what we are seeing is that 2.9%, it's fair, but it's not good enough, and we have to do more. Even if you look at the economy from other perspectives in terms of inequality, gender participation, you tend to see that the economy is not growing as well as it should for an economy that's projected to overtake the United States by 2050 as the third largest. So I think we have to put in more effort.
Yeah, all eyes on China at this time. But, compared to other countries, after exiting, the lockdown phase, due to COVID-19, how's Nigeria performed, compared to our peers?
Well, when you look at the Sub-Saharan Africa, it tends to say, okay, let's say South Africa, which we have some sort of rivalry in terms of who is the biggest and all of that. But you see that post-lockdown, most countries have done pretty well. South Africa, from a contraction of around 6% in 2020, did 4% in 2021. Q1 number was pretty decent, and it was able to reach pre-pandemic levels. But you sort of see that the same kind of story is playing out across the board. Then you have new headwinds in terms of the Ukraine war. You have the normalization of global monetary policy, which has led to interest rate off across developed markets. And this has sort of put pressure on currencies across emerging markets as well. You have a lot of these challenges playing out. You also see the case where there are issues peculiar to the country. South Africa has issues, electricity generation. You have Nigeria, our FX issues. So by and large, I think we're doing okay. When you want to compare with South Africa and the likes like that, they have IMF projects like 2.4% growth at the end of 2022, Nigeria 3.4. So when you want to put that, well, I tend to say I will not want to force to do that comparison. I'll rather that we look at the economy and the peculiarity of the economy and address those issues that are inherent to that economy.
All right, Shego Adams, we'll be watching out. We'll be watching out for that data. It's going to come out sometime later today, maybe about 12. When it comes out, we'll drill down on that next week. Thank you so much, Shego Adams, research analyst, AfriInvest Research. It was great having you.
Thank you for having me.
All right, now, so we'll be heading on to the markets in a moment. Now, so that big move yesterday, we have Anyete now to tell us how he sees it, because I know, Anyete, you told me yesterday on the show that the market was going to continue in the green, and it happened. So I guess your crystal ball is quite
exactly
legit.
Yes, Ladi, but let me just point out first before, because I know people might be watching and would want to...
They are watching.
So, but I wouldn't say I'm an official market, predictor.
Okay.
Okay, so
but you can make money from that. Why not?
Yeah, the market is all about making money, mega money, and sometimes you also share in the losses. So it's not just about the gains, you also share in the losses. But, let's just see, let's continue to revel in the gains that we had, the two-day back-to-back
while it lasts.
Exactly. All right, so let's let's go straight to the markets. We had over 532 billion gained, added to the previous gain that we had on midweek trading session. So at the close of Thursday's trading session, we had a 2.03% massive rebound or consolidation on the all-share index, which has crossed back into the 49,000 level, which it lost earlier in the week. And that is, it came on the back of gains from 18 stocks. Now, let's move over to the sectoral performance and see how it performed. Yeah, so there you have it. The banking counter was down, and that's no thanks to losses from Zenith Bank and GTCO. Industrial goods was also down in spite of the 3.3% gain recorded by Boa Cement was down, but Boa Foods was up, which reflected on the consumer goods counter. It was up by 0.77%. Other gainers, insurance, as well as the oil and gas sector. Now, let's flip over to the next page. You see, that's the stock of the day. Airtel Africa, that's what made the magic. The August visitor, you call it August visitor in the month of August. Well, it's actually an August visitor because it comes once in a while, and once it comes, it makes an impact either on the red side or on the green side. But as of yesterday, it went up by more than 7%, and then it has crossed a new price high of 2,040 Naira per share. So that was what actually drove the market, in addition to gains from 17 other gainers, which include the NGX, the parent company of the Nigerian Exchange Limited. Now, take a look at the volume, the activity chart. Volume was up by 35.2%. The value was, however, down. It fell by 18.15%, while the deals was also down by 6.32%. There you have it, 3,515 deals. So now, to give us more insight, because we had some news on the market yesterday, let's talk to Peter Abe, an equity trader at Stanbic IBTC Stockbrokers. Thank you for joining us, Peter.
Thank you for having me.
Okay, now, yes, we see that the market made a stronger comeback back into the 49,000 level. But at the same time, it's quite interesting to know that there was news from the NGX that a board member of Boa Foods he announced his resignation. That's Nassero Rabiu. He announced his resignation less than a year after his appointment. Now, can you tell us, how is that stock performing at this time?
Well, thank you. The market, Boa Foods gained about 3.33% yesterday. I think the name has been one of the top consumer names we have seen in the market. They came in last year, and they've been waxing in terms of the numbers they've puts into market. So we feel it's a very good name that consumers should have in their portfolio. And concerning the resignation, we all understand that this is how corporate organizations are. One goes in and one goes out, but the corporate governance is what determines how a company performs. And I think the company has it, so it's a good one to have.
Now, speaking of the market, is the last trading day of the week, and let's say the last Friday trading, the last Friday for August, And then, of course, we've seen month-to-date loss has been reduced to about 1.4%, while year-to-date is still gaining, is at about some 15%. So what's your outlook for the market as the day proceeds?
Well, we've had a mixed trading all through. We had gains towards the close of the week, and there were losses in the previous days. So when we look at all this, it's don't expect much activity being Friday. So we likely have it flat at the end of the day. Probably just a few gain at the end, but it's going to be a very quiet day, I think.
Okay, so, all right, thank you, Peter. So we'll keep our eyes on that outlook for the market, and we hope for more gains at the market, fingers crossed.
Thank you very much.
So now let's go back. We'll go straight to the smaller unlisted, what you call the unlisted securities market. It's also shared in the gains that is recorded across the market. That's both the equities market and the unlisted securities market. It was up by 1.61% at 762.28 points. That's where you have it. And then, of course, at the same time, its market cap has crossed back to the 1 trillion naira level. At some point, it fell to about some 900 plus billion naira. Let's move over to the next page. That's it. 24,212. That's the volume which it printed yesterday. But that volume was down by 80.88% in contrast to what you had on Wednesday at the close of yesterday's trading session. At the same time, that market recorded two gainers. Let's move over to the fixed income market. The fixed income market, the bonds market, it was bearish. Don't forget that yesterday you had on Wednesday, you had a primary market auction in which the stop rates had all increased. But taking a look at this figure, the table there, the highest number of deals was carried out on the 21st of January 2024 two paper, which had just 4 deals, total 2 billion naira. And at the end of the day, total deals carried out there was worth 5.54 billion naira. Let's move over to the Treasury bills market. The Treasury bills market, it was, however, quiet trading there. Average yield there had remained at 7.8%. So that's it. The number of deals carried out, one apiece on the 24th of November 2022 paper later this year, and the 23rd of February 2023, which is next year. Cumulative 18 number of deals valued at 13.70 billion naira. At the same time, the central bank's special bills, well, total number of deals carried out there was 11, worth about 16.51 billion naira. And of course, that's it for that market there. So, yeah.
Maybe you could dust off that crystal ball again and tell me what to expect for the final trading day of this week.
Yeah, well, I think, fingers crossed, that our market analyst had his own opinion.
Peter says he's expecting a quiet trade today. Yeah.
But I'll still tell you that I'm sure, because of the losses that we had here on Tuesday, the massive loss. So some investors will still be trying to key into some high-value equities. If you take a look at the sectoral performance, it was kind of mixed. So which means that there were still some losses. At the same time, we had yesterday we had two back-to-back the market breadth. The number of gainers is still outweighed the number of losers. So I still expect, my crystal ball tells me that the market is still going to go in the green, but not by that massive gain that you saw.
In the green, but not by that massive gain. No. All right, I'll take that, and I'll see how it goes. Thank you so much, Adese.
Pleasure.
All right, now, so after the break, we head on to London. Do stay with us. This is Business Morning. Let's head on to the UK now. It's still about the energy crisis right there. And we have Juliana join us right now to bring us up to speed. Great to have you, Juliana. So the energy price cap, it's official. It's going to be about 80% up in October. How's this being received?
Good morning, Laddie. Well, if you're in the UK at the moment, it kind of feels as if you're on a hamster wheel of very bad economic news, and nobody can get off. And just today, as had been discussed, the Ofgem energy regulator has announced that the energy price cap will rise 80% for the months of October, November and December from where it is today at about £1,970 to £3,551. It's going to be really difficult for me to try and calculate that into Naira, but it is a ridiculously high amount of money, and it's an amount of money that millions of people in this country simply cannot afford to pay. So typically, if you think of your end of month bills in this country, the highest bill for most people is a mortgage, and if you're lucky, you've got a mortgage at about £700. In a couple of months, one of your highest bills will be your energy bill, and you could be paying anywhere between £350 and £550 a month, and it is pretty shocking, especially if you look further ahead, which we have to do because we are going through an economic downturn at the moment. In January, this could rise to £5,500, and it could rise in April to £6,000 a year. Now, you know, going back, there are so many reasons why this is happening, but I think the main unprecedented reason is, of course, this 6-month ongoing war in Ukraine. It's pushed up the cost of wholesale gas and energy prices, and energy firms in the UK just simply cannot afford to cope with what was a £1,200 a year price cap, which is why there was pressure on the energy regulator to increase the amount of times in a year that they raise it, because before it was only risen once a year, and it was very rarely raised, but it's been rising every 3 months. It is shocking. It is dominating headlines here in the UK at the moment, affecting above 24 million households, but really affecting people on low and no incomes. And also, most importantly, it's also affecting middle-income earners, because those are the people who are not getting the support from the government, because the government say, of course, if you're working, you've got a decent wage, you don't need it, but they're being squeezed left, right and centre because inflation is currently at 10.1%. You're not getting any support from the government, and it's not just your energy bill. There are so many other bills that are going up, but yeah, pretty shocking announcement from the energy regulator here in Britain today.
Yeah, and we need those oil and gas prices to actually come down, because that market is stoking so much right now. But are there any planned buffers for households at this time?
Well, Nadhim Zahawi, the Chancellor, has spoken this morning, of course, you know, kind of trying to sympathise with families who are really, really anxious, because, unfortunately, some people will die. If you listen to some commentary that's currently taking place in the UK at the moment, there are pensioners, there are individuals that say, well, I'm just not going to put my heating on. But if you're living in a kind of post-war, old-school property in Britain, then it does get really, really cold. Not only does it get cold, it gets damp as well, and that can lead on to other illnesses. So the support that's been put in place is, first of all, that £650 payment for vulnerable households. They got their first instalment of £326 a couple of weeks ago. They're going to be getting a further £324 in the next 8 weeks or so. There is also this £400 take-off of bills. This is going to affect everybody, so even the middle income and the high income earners will be getting, in the next couple of months, £400 off their bill. There is also extra support for those who are disabled and those who are elderly, but so much more needs to be done, because, again, it is really important to reiterate that the vast majority of people in this country will not be able to afford those bills. This is giving Liz Truss and Rishi Sunak, the contenders to succeed Prime Minister Boris Johnson, a huge headache, because it's been described as an economic catastrophe. In fact, I heard one consumer expert this morning saying this is potentially a humanitarian crisis coming into the UK. They are going to have to resolve it. They are definitely going to have to put their hand in the coffers, not their coffers, by the way, the taxpayers' coffers. So it's our money. They're going to have to put their hand in that piggy bank and give it to people, because at the moment, these kind of eye-watering prices are just way too much, ridiculously high. And I think all people in this country agree that something must be done seriously if we are not going to get into a pretty crippling crisis that does lead on to other things.
Quite a serious situation over there. Thank you so much, Juliana. Just try to enjoy the weekend, I guess.
I'll try.
All right, now, so much happening in the UK right now. But let's move on to other markets now. Talking about the crypto space, not looking any better there. Still fear, but better than what we had yesterday. We had extreme fear yesterday. We got about 25 points of 100, but now we're back to 27. Which is just fear. Let's look at who's the weak performer for this week. Now, we see EOS there. It's gone up about 18.62% in 7 days there at $1.66 per coin there. EOS been on the move. They had that hard fork coming for the token there. So that's one of the best performers. Now, market cap there, below $1 trillion. It's happened again, and this time by a big chunk there, $989.44 billion. Down about 5.28%. So we're seeing volatility in the crypto market at this point. Volume traded $63.03 billion. That's down about 2.85%. And Bitcoin dominance back above the 39% range now, 41%. Let's see price of Bitcoin, 21,457. It's up 0.22% this morning, but it was getting to 21.7. We're having a pullback at this time. Volume traded $31.06 billion. We have Ethereum there. Ethereum is holding up there at $1,664. That's down about 0.07. Talking about Ethereum, if you move over to the slide. All right, now let's bring in Solomon Amunde now, digital market analyst. Hello, Solomon. Great to have you. Hello, Solomon.
Good morning, Laddie. Good morning.
Oh, great. Yeah, I hear you now. So, Solomon, let's talk about exchanges now. We're seeing more centralized exchanges for the crypto market, asking users for KYC, as know your customer, but the decentralized exchanges aren't doing that, at this time. What do you think is the future for, centralized exchanges and decentralized exchanges?
Okay, I think in the future, most would coexist perfectly. And gradually, we are beginning to see decentralized exchanges incorporate most of the features of centralized exchanges. And let's not forget that the whole idea of crypto is for a decentralized ecosystem, and decentralized exchanges, so far so good, have been pushing that. Centralized exchange, as you can see, most of the crypto OGs argue, like Vitalik said it, he wished Binance wouldn't be doing as well as they are right now because they hold so much power currently. And most centralized exchanges, just by delisting a token, can actually kill that token. So basically speaking, the ecosystem is actually pushing for adoption and larger volume going to decentralized exchanges because they would support most projects and they would give power back to the people. So I feel in the future, we'll gradually see more volume move to decentralized exchanges and less volume from centralized exchanges. But that will do with so much adoption and sensitization of the people out there to understand the significance and importance.
Quite interesting. And quickly now, what do you see for price of Bitcoin going into the weekend next week?
Yeah, currently Bitcoin is still trying to break an upward resistance at around $21,750, while we are facing a very good support at $20,900. So far, so good, it's holding. But with what I'm saying next week, I feel we might likely go down further to about 20,400 before we can get a huge upward movement to about $24.
Solomon, thank you so much for watching how price action goes for the weekend. Thank you, Solomon Munde. All right, let's move over to the top ultimate market cap there. We see it's mixed there. BNB now trading below that $300 mark, down 0.17%. And we see it's mixed bag there. Let's see top gainers for today. We see T4L there. Topping that count is up 23.97% at 7 cents. We're seeing, most of these fan tokens going up, and we see T4 following the likes of Chili's there. Cardano up 3.26%, and we see Decred there back in the top gainers again at $32, up 0.35%. So it's quite a mixed bag, and we see the top losers there. double-digit loss with little doubt. That's been on the losers counter for a while now. And see, RWEAV down about 6.65%. So the market is not looking so good. We're seeing quite a lot of volatility. All right, that's a wrap on the market and the wrap on the program today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just search for Channels Television on YouTube, and you get all other videos from here. Thank you so much for watching. Enjoy the weekend. Bye for now.